Question 1. The audit findings in California indicate a pattern of unusual financial transactions and potential underreporting of income by a business. As an IRS special agent, what is the most appropriate initial course of action to determine if a criminal investigation is warranted? Option A. Share the preliminary audit findings with a competitor of the business to gauge their reaction and gather informal intelligence. Option B. Report the findings to the U.S. Attorney's Office for immediate prosecution without further internal assessment. Option C. Discreetly gather additional preliminary information and documentation to corroborate the audit findings and establish reasonable suspicion before initiating formal investigative steps. Option D. Immediately confront the business owner with the audit findings and demand an explanation for the discrepancies. Correct answer is C. Discreetly gather additional preliminary information and documentation to corroborate the audit findings and establish reasonable suspicion before initiating formal investigative steps. Explanation. The audit findings indicate a potential discrepancy in financial reporting that could have implications for tax compliance and potentially signal illicit financial activity. This scenario is professionally challenging because it requires an IRS special agent to balance the need for thorough investigation with the imperative to adhere strictly to legal and procedural boundaries. Missteps can compromise evidence, violate individual rights, or lead to the dismissal of charges. Careful judgment is required to navigate the complexities of financial forensics, informant management, and the legal framework governing investigation. The best approach involves meticulously documenting all findings and observations, cross-referencing them with known financial regulations and patterns of illicit activity, and then initiating a formal, legally sanctioned investigative process. This includes discreetly gathering preliminary information to establish reasonable suspicion before engaging in more intrusive investigative techniques. The justification for this approach lies in the foundational principles of due process and the strict legal requirements for initiating formal investigations under U.S. federal law, particularly those enforced by the IRS. It ensures that any subsequent actions are based on a solid, legally defensible foundation, protecting the integrity of the investigation and any potential prosecution. An approach that involves directly confronting the individual based on preliminary audit findings, without further corroboration or legal authorization, is professionally unacceptable. This bypasses the established legal procedures for evidence gathering and can be construed as an unlawful search or interrogation, violating Fourth Amendment protections against unreasonable searches and seizures. Furthermore, it risks tipping off the subject, allowing them to destroy evidence or alter their financial activities, thereby hindering the investigation. Another unacceptable approach is to immediately escalate the matter to a full-blown criminal investigation based solely on the audit findings, without a preliminary assessment of the nature and severity of the potential violation. This can be an inefficient use of resources and may lead to an overzealous investigation that lacks sufficient probable cause, potentially damaging reputations or causing undue distress without a clear criminal nexus. It fails to apply a tiered investigative strategy that is both effective and legally sound. Finally, an approach that involves sharing preliminary, unverified audit findings with external parties, such as other government agencies or private entities, before a formal investigation is initiated and authorized, is also professionally unsound. This constitutes a breach of confidentiality and can violate privacy laws and IRS regulations regarding the disclosure of taxpayer information. Such premature disclosure can prejudice the investigation and create legal liabilities. Professionals should employ a structured decision-making process that begins with a thorough understanding of the initial findings and their potential implications. This involves assessing the credibility of the information, identifying potential legal violations, and determining the appropriate level of investigative response. The process should prioritize adherence to legal statutes, IRS policies, and ethical guidelines, ensuring that all actions are justifiable, proportionate, and conducted with the utmost integrity. Question 2. The monitoring system demonstrates a pattern of unusual financial transactions originating from a shell corporation, raising concerns about potential money laundering activities within the jurisdiction of California. As an IRS special agent, which of the following initial investigative steps best aligns with professional best practices and legal requirements? Option A. Immediately execute a search warrant on the Shell Corporation's primary business address based on the initial alert from the monitoring system. Option B. File a formal tax evasion charge against the Shell Corporation without further investigation, citing the suspicious transaction pattern. Option C. Contact the principals of the Shell Corporation directly to question them about the nature of their financial transactions. Option D. Initiate a discrete preliminary investigation to gather additional corroborating information through legally permissible means, such as open-source intelligence and financial record analysis, to establish probable cause. The correct answer is D. Initiate a discrete preliminary investigation to gather additional corroborating information through legally permissible means, such as open-source intelligence and financial record analysis, to establish probable cause. Explanation. The monitoring system demonstrates a pattern of unusual financial transactions originating from a shell corporation that appears to be a front for illicit activities. This scenario is professionally challenging because it requires an IRS special agent to balance the need for thorough investigation with the imperative to act swiftly and decisively, while adhering strictly to legal and ethical boundaries. The agent must navigate complex financial data, understand the nuances of money laundering schemes, and ensure all investigative steps are legally sound to avoid compromising evidence. The best professional practice involves initiating a preliminary investigation based on the Suspicious Activity Report, SAR, flagged by the monitoring system. This approach involves discreetly gathering additional information through legally permissible means, such as open-source intelligence and financial record analysis, to corroborate the initial suspicions. This aligns with IRSCI's mandate to investigate financial crimes and tax evasion, and it respects due process by not prematurely accusing or acting without sufficient probable cause. The justification lies in the principle of building a solid foundation of evidence before taking more intrusive investigative actions, ensuring compliance with Fourth Amendment protections against unreasonable searches and seizures, and adhering to established investigative protocols. An incorrect approach would be to immediately execute a search warrant on the Shell Corporation's premises based solely on the initial alert from the monitoring system. This is professionally unacceptable because it bypasses the crucial step of preliminary investigation and corroboration. Acting without sufficient probable cause, which would be established through further investigation, could lead to a violation of constitutional rights and render any seized evidence inadmissible in court, thereby jeopardizing the entire investigation. Another professionally unacceptable approach is to ignore the alert from the monitoring system due to the perceived complexity of the transactions. This failure to investigate a potential financial crime is a dereliction of duty and a violation of the agent's core responsibilities. It allows illicit financial activities to continue unchecked, undermining the integrity of the financial system and the tax code. Finally, an incorrect approach would be to contact the principals of the Shell Corporation directly to inquire about the transactions without proper authorization or investigative strategy. This premature disclosure of the investigation could tip off the subjects, allowing them to destroy evidence, flee, or further conceal their illicit activities, thereby severely hindering or completely derailing the investigation. The professional decision-making process for similar situations should involve a systematic approach. 1. Acknowledge and document the initial alert. 2. Conduct a preliminary assessment to determine the level of suspicion. 3. If suspicion is warranted, initiate discrete, legally permissible investigative steps to gather corroborating evidence. 4. Consult with supervisors and legal counsel as the investigation progresses. 5. Only proceed with more intrusive measures, such as search warrants or subpoenas, when sufficient probable cause has been established. Question 3. Cost-benefit analysis shows that immediate action is crucial to prevent the potential destruction of evidence related to a suspected tax fraud scheme in a private residence in Illinois. An IRSCI special agent has credible information suggesting that incriminating documents are about to be destroyed. What is the most appropriate course of action for the agent to take? Option A. Enter the residence and conduct a search to seize any incriminating documents before they can be destroyed. Option B. Secure the perimeter of the residence and immediately contact the U.S. Attorney's Office or a designated supervisor to initiate the process of obtaining a search warrant. Option C. Wait for a supervisor to arrive on scene before taking any action, even if it means risking the loss of critical evidence. Option D. Rely on confidential informants to monitor the situation and report any attempts to destroy evidence, delaying any direct action until further confirmation. Correct answer is B. Secure the perimeter of the residence and immediately contact the U.S. Attorney's Office or a designated supervisor to initiate the process of obtaining a search warrant. Explanation. Scenario analysis. This scenario presents a professional challenge for an IRS CI special agent due to the inherent conflict between the need for swift action to secure evidence and the imperative to adhere strictly to legal and procedural safeguards. The agent must balance the urgency of a potential criminal investigation with the constitutional rights of the individual and the established protocols for evidence collection. Failure to do so could compromise the investigation, lead to the suppression of crucial evidence, and result in disciplinary action or even civil liability. The agent's judgment is critical in determining the appropriate course of action that is both effective and legally sound. Correct approach analysis. The best professional practice involves immediately securing the location and notifying the appropriate legal counsel or supervisor to obtain a search warrant. This approach is correct because it prioritizes legal compliance and due process. Under the Fourth Amendment of the U.S. Constitution, individuals have the right to be free from unreasonable searches and seizures. Law enforcement officers generally need a warrant, supported by probable cause, to conduct a search. By securing the premises and initiating the warrant process, the agent ensures that any subsequent search and seizure will be conducted in accordance with legal requirements, thereby preserving the integrity of the evidence and the investigation. This aligns with IRS CI policy and federal law enforcement standards that emphasize lawful evidence acquisition. Incorrect approach is analysis. Entering the premises and conducting a search without a warrant, even with the belief that evidence will be destroyed, is a significant regulatory and ethical failure. This action violates the Fourth Amendment's protection against unreasonable searches and seizures. Such a warrantless search, unless falling under a very narrow exception, which is unlikely to be applicable in this general scenario without further specific exigent circumstances detailed, would render any evidence obtained inadmissible in court under the exclusionary rule. Furthermore, it undermines public trust in law enforcement and could lead to severe professional repercussions. Contacting informants for information about the contents of the premises without taking steps to secure a warrant or obtain consent is also an insufficient approach. While intelligence gathering is important, relying solely on informant tips without corroboration or legal authorization to search does not satisfy the probable cause requirement for a warrant. This approach risks acting on potentially unreliable information and does not address the immediate need to preserve evidence if a crime is suspected. It bypasses the necessary legal framework for intrusive investigative steps, delaying any action until a warrant can be obtained. Even if the agent suspects imminent destruction of evidence, could also be problematic if the situation truly presents exigent circumstances. However, in the absence of clear and immediate danger of evidence destruction that would legally justify a warrantless entry, the primary failure of this approach is the missed opportunity to act decisively within legal bounds. The best practice is to initiate the warrant process immediately upon suspecting criminal activity and potential evidence destruction, rather than passively waiting if there's a viable legal path to secure the scene and evidence. Professional reasoning. Professionals in IRS CI must employ a decision-making framework that begins with a thorough assessment of the situation, identifying potential criminal activity and the immediate risks to evidence integrity. This assessment must then be weighed against constitutional protections and established legal procedures. The agent should always consider the most legally sound and procedurally compliant course of action first. If exigent circumstances are clearly present and meet the legal threshold for a warrantless search, that option might be considered, but it carries significant risk and requires meticulous justification. In most cases, the preferred and safest route is to secure the scene and immediately seek judicial authorization through a warrant. This process ensures that investigative actions are both effective and defensible in court, upholding the principles of justice and the rule of law. Question 4. The performance metrics show a pattern of delayed case closures within the IRS Criminal Investigation, IRS PSI division operating in California, with a significant number of cases exceeding established timelines for evidence review and prosecution referral. Considering the paramount importance of adhering to federal investigative standards and the Internal Revenue Code, What is the most appropriate initial response for the special agent in charge, SAC, to address this trend? Option A. Advise the U.S. Attorney's Office in California to accept fewer complex cases to reduce the workload on IRS-CI agents. Option B. Initiate a comprehensive review of the flagged cases to identify specific procedural bottlenecks, cross-reference agent actions with the Internal Revenue Code and IRS-CI policies, and develop targeted remedial training based on findings. Option C. Immediately implement a system of severe penalties for any agent whose cases exceed the established timelines, without conducting an individual case review. Option D. Instruct all agents to prioritize closing cases quickly, regardless of the thoroughness of evidence review, to improve the performance metrics. The correct answer is B. Initiate a comprehensive review of the flagged cases to identify specific procedural bottlenecks, cross-reference agent actions with the Internal Revenue Code and IRS-CI policies, and develop targeted remedial training based on findings. Explanation. The performance metrics show a concerning trend in the timely resolution of complex financial crime investigations within the IRS Criminal Investigation, IRS-CI, division in California. This scenario is professionally challenging because it requires balancing the imperative to aggressively pursue financial criminals with the need for meticulous adherence to legal and procedural safeguards, all while managing resource constraints and interagency cooperation. A failure to properly document and justify investigative steps can jeopardize evidence, lead to case dismissal, and undermine public trust in the IRS-CI's mission. The best approach involves a thorough, documented review of the investigative process for each case flagged by the performance metrics. This includes identifying specific procedural deviations, cross-referencing them with the Internal Revenue Code, IRC, and relevant IRS-CI policies and procedures, and then developing targeted remedial training for the agents involved. This approach is correct because it directly addresses the root cause of the performance issues by focusing on compliance with established legal frameworks and internal guidelines. It prioritizes evidence integrity and due process, which are paramount in criminal investigations. Furthermore, it fosters a culture of continuous improvement by providing agents with clear feedback and opportunities for professional development, ensuring future investigations are conducted with the highest standards of legal and ethical conduct, as mandated by federal law and IRS directives. An incorrect approach would be to dismiss the performance metrics as mere statistical anomalies without further investigation. This fails to acknowledge potential systemic issues or individual agent training deficiencies, thereby allowing non-compliant investigative practices to persist and potentially compromise ongoing or future cases. It also neglects the professional responsibility to ensure all IRS-CI operations in California are conducted in accordance with federal statutes and IRS policy. Another incorrect approach would be to immediately implement punitive measures against agents without a thorough, objective review of the underlying causes for the performance trends. This can demoralize the workforce, create an environment of fear, and distract from the actual need for procedural clarification or additional training. It bypasses the professional obligation to conduct fair and thorough assessments before imposing disciplinary actions, potentially violating principles of administrative fairness and IRS personnel guidelines. A further incorrect approach would be to focus solely on increasing the volume of investigations without addressing the quality and legality of the investigative processes. This prioritizes quantity over compliance, increasing the risk of improperly obtained evidence and flawed investigations. It ignores the fundamental requirement that all IRS-CI activities must be conducted within the bounds of the law and IRS regulations, as outlined in Title 26 of the United States Code and associated IRS directives. Professionals should employ a systematic, data-driven approach to performance evaluation. This involves first understanding the metrics, then conducting a granular review of the underlying processes, identifying specific areas of noncompliance, consulting relevant legal and policy frameworks, such as the IRC, Code of Federal Regulations, and IRS Manual, and finally implementing targeted corrective actions that may include training, policy clarification, or procedural adjustments. This ensures that investigations are not only effective, but also legally sound and ethically defensible. Question 5. During the evaluation of a complex financial fraud investigation in California, An IRS criminal investigation. IRS special agent discovers that a key potential witness, whose testimony could be crucial to the case, is a former close acquaintance from their college days. The agent has not seen or spoken to this individual in over 5 years, but recognizes their name and the nature of their potential involvement from initial case review. The agent is concerned about how this personal history might impact the interview and the overall investigation. What is the most appropriate course of action for the special agent? Option A. Immediately report the personal connection to their supervising agent and the Assistant United States Attorney, AUSA, assigned to the case to discuss potential conflicts and determine the best course of action for the interview. Option B. Proceed with the interview as planned, confident in their ability to remain objective and conduct a thorough, unbiased examination of the witness. Option C. Discreetly alter the interview plan to avoid asking questions that might directly touch upon the agent's past relationship with the witness, focusing only on the most critical aspects of the case. Option D. Reach out to the former acquaintance informally, outside of official channels, to gauge their willingness to cooperate and to subtly assess the potential impact of their relationship on the investigation. The correct answer is A. Immediately report the personal connection to their supervising agent and the Assistant United States Attorney, AUSA, assigned to the case to discuss potential conflicts and determine the best course of action for the interview. Explanation. Scenario analysis. This scenario presents a professional challenge for an IRS criminal investigation, IRS special agent in California, due to the inherent conflict between maintaining the integrity of an ongoing investigation and the personal relationship with a potential witness. The agent must navigate the delicate balance of their official duties, which require impartiality and adherence to strict investigative protocols, against a personal connection that could be perceived as compromising or could lead to unintentional disclosure of sensitive information. The need for absolute discretion and adherence to the IRSCI's Code of Conduct is paramount. Correct approach analysis. The best professional approach involves immediately reporting the personal connection to the supervising agent and the Assistant United States Attorney, AUSA, assigned to the case. This approach is correct because it upholds the principles of transparency, accountability, and the avoidance of conflicts of interest, which are fundamental to maintaining the integrity of federal investigations. By disclosing the relationship, the agent ensures that appropriate measures can be taken to safeguard the investigation, such as reassigning the witness interview or implementing enhanced oversight. This aligns with IRSCI policy and federal ethics regulations that mandate reporting any potential conflicts or situations that could impair an agent's objectivity or create the appearance of impropriety. Incorrect approach is analysis. One incorrect approach is to proceed with the interview without disclosing the personal relationship, believing the agent can remain objective. This is ethically and regulatorily flawed because it violates the duty of candor and transparency. Even if the agent believes they can remain impartial, the appearance of bias can severely undermine the credibility of the investigation and any subsequent legal proceedings. Federal regulations and IRSCI guidelines strictly prohibit situations that could lead to even the appearance of a conflict of interest. Another incorrect approach is to subtly steer the interview away from sensitive topics related to the personal connection, hoping to avoid any complications. This is problematic as it involves a deliberate omission of relevant information and an attempt to manipulate the investigative process based on personal considerations. It demonstrates a lack of professional integrity and a failure to adhere to the investigative mandate, potentially compromising the thoroughness and objectivity of the inquiry. A further incorrect approach is to contact the individual informally outside of official channels to gauge their willingness to cooperate, framing it as a friendly check-in. This is a significant ethical and regulatory breach. It bypasses established investigative procedures, risks inadvertently disclosing investigative details, and blurs the lines between professional duty and personal interaction, creating a clear conflict of interest and potentially jeopardizing the investigation. Professional reasoning. Professionals in IRSCI must employ a decision-making framework that prioritizes ethical conduct and regulatory compliance above all else. This involves a proactive approach to identifying and mitigating potential conflicts of interest. When faced with a situation that could compromise objectivity or create an appearance of impropriety, the immediate and mandatory step is to report the circumstances to the appropriate supervisory personnel. This ensures that the decision-making process is collective, transparent, and guided by established policies and legal requirements, thereby protecting the integrity of the investigation and the agency. Question 6. What factors determine the appropriate course of action for an IRS criminal investigation, IRS special agent in California, when they discover that a subject of an active investigation is a close personal friend, and the agent has not previously disclosed this relationship? Option A. Terminate the investigation without further action due to the personal conflict of interest, without consulting supervisors. Option B. Proceed with the investigation, relying on personal integrity to remain objective and avoid any appearance of impropriety. Option C. Immediately disclose the personal relationship to the supervising agent and relevant authorities to ensure impartiality and adherence to ethical guidelines. Option D. Subtly alter the investigative focus to avoid areas that could directly implicate the friend, while maintaining the appearance of a thorough inquiry. Correct answer is C. Immediately disclose the personal relationship to the supervising agent and relevant authorities to ensure impartiality and adherence to ethical guidelines. Explanation. This scenario presents a professional challenge for an IRS criminal investigation, IRS special agent, due to the inherent conflict between the agent's duty to uphold the law and the potential for personal gain or undue influence. The agent must navigate a situation where a close personal relationship could compromise the integrity of an ongoing investigation, potentially leading to obstruction of justice or a violation of departmental ethics regulations. Careful judgment is required to ensure that all investigative actions are based solely on evidence and legal mandates, free from personal bias or external pressure. The best professional approach involves immediately and transparently disclosing the personal relationship to the supervising agent and relevant authorities. This approach is correct because it adheres to the strict ethical guidelines and departmental policies governing IRS special agents, which mandate full disclosure of any potential conflicts of interest. By reporting the relationship, the agent ensures that appropriate measures can be taken to maintain the integrity of the investigation, such as reassigning the case or implementing enhanced oversight. This proactive disclosure upholds the principles of impartiality, accountability, and public trust essential to law enforcement. An incorrect approach would be to proceed with the investigation without disclosing the relationship, hoping to maintain objectivity. This is professionally unacceptable because it creates a significant risk of actual or perceived bias, undermining the credibility of the investigation and the agent's actions. It violates the ethical obligation to avoid even the appearance of impropriety and could lead to accusations of favoritism or obstruction if the relationship becomes known. Another incorrect approach is to subtly steer the investigation away from areas that might directly implicate the friend, while still appearing to conduct a thorough inquiry. This is ethically reprehensible and constitutes a serious breach of duty. Such actions could be construed as obstruction of justice or a violation of the agent's oath to uphold the law without prejudice. The agent's primary responsibility is to follow the evidence, not to protect personal acquaintances. Finally, an incorrect approach would be to terminate the investigation prematurely due to the personal relationship, without proper legal justification or supervisory approval. This would be a dereliction of duty and could be seen as an attempt to conceal potential wrongdoing or to avoid difficult professional decisions. Investigations must be conducted to their lawful conclusion, based on evidence and legal standards, not personal convenience or relationships. The professional decision-making process for similar situations should involve a clear understanding of departmental ethics policies and conflict of interest regulations. When a potential conflict arises, the agent should first identify the nature of the relationship and its potential impact on their duties. The next step is to consult the relevant policies and seek guidance from their supervisor or the ethics office. Full and honest disclosure is almost always the most appropriate initial step, allowing for informed decisions to be made regarding case management and agent assignment. Maintaining objectivity, integrity, and public trust should be the paramount considerations in all professional conduct. Question 7. The risk matrix shows a potential for significant reputational damage to the IRS and compromised investigative integrity if an agent acts on information obtained through questionable means. While conducting a routine financial review in Illinois, You are approached by an individual claiming to have insider information regarding a large-scale tax evasion scheme involving a prominent local business. The individual states they obtained this information through means they are unwilling to disclose, but insists it is accurate and can be corroborated. What is the most appropriate course of action for an IRS special agent? Option A. Proceed with a preliminary, discreet investigation to verify the information's credibility before reporting it to supervisors, to avoid wasting their time if it proves unfounded. Option B. Accept the information and begin building a case, assuming the individual's claims of accuracy are valid and that the source's methods are irrelevant to the investigation's outcome. Option C. Advise the individual that you cannot accept information obtained through undisclosed or potentially illicit means and instruct them to cease contact. Option D. Immediately report the unsolicited information and the circumstances of its receipt to your direct supervisor and the Department of Justice liaison for assessment of its legality and admissibility. The correct answer is D. Immediately report the unsolicited information and the circumstances of its receipt to your direct supervisor and the Department of Justice liaison for assessment of its legality and admissibility. Explanation. The risk matrix shows a potential for significant reputational damage to the IRS and compromised investigative integrity if an agent acts on information obtained through questionable means. This scenario is professionally challenging because it pits the agent's duty to investigate potential financial crimes against the ethical imperative to uphold the law and maintain public trust. The agent must navigate a situation where a seemingly valuable lead could be tainted by its origin, requiring careful judgment to avoid violating established legal and ethical boundaries. The best professional approach involves immediately reporting the unsolicited, potentially privileged information to the appropriate IRS supervisory channels and the Department of Justice (DOJ) liaison. This approach is correct because it adheres strictly to IRS policy and federal law regarding the acquisition and handling of information. Specifically, IRS Manual 10.3. 1. Investigative operations and related directives emphasize the importance of lawful evidence gathering and the prohibition of using illegally obtained information. By escalating the matter, the agent ensures that the information is assessed by those with the authority to determine its admissibility and legality, and that any subsequent investigative steps are conducted within the bounds of the law. This upholds the principle of due process and protects the integrity of the investigation and the judicial process. An incorrect approach would be to proceed with the investigation based on the provided information without disclosure. This is professionally unacceptable because it constitutes a direct violation of IRS policy and federal statutes governing evidence. Such an action could lead to the suppression of any evidence derived from this tainted source, jeopardizing the entire investigation and potentially leading to disciplinary action against the agent. Furthermore, it undermines the principle of lawful evidence collection, which is a cornerstone of criminal investigations. Another incorrect approach would be to attempt to independently verify the information through covert means without informing supervisors. This is ethically and legally flawed, as it bypasses established protocols for handling sensitive information and could be construed as an unauthorized investigative step. It also risks further compromising the investigation if the verification methods themselves are deemed improper or illegal. Finally, an incorrect approach would be to dismiss the information entirely without any internal reporting. While the information may ultimately prove inadmissible, discarding a potential lead without proper assessment by supervisory and legal authorities is a failure of the agent's duty to pursue all credible avenues of investigation within legal and ethical parameters. It also misses an opportunity to identify potential misconduct or procedural breaches that might have led to the information being offered in this manner. Professionals should employ a decision-making framework that prioritizes adherence to policy, law, and ethical conduct. This involves a clear understanding of reporting requirements, the chain of command, and the legal standards for evidence. When faced with ambiguous or potentially problematic information, the default action should always be to seek guidance and approval from superiors and legal counsel, ensuring that all investigative actions are transparent, lawful, and ethically sound. Question 8. Market research demonstrates that informants can be a valuable source of intelligence for IRS investigations in California. An informant approaches a special agent with information about potential tax evasion by a prominent business owner. The informant expresses a desire for personal gain and hints at their ability to obtain specific financial documents if incentivized. The special agent must decide how to proceed. Option A. Offer the informant a direct cash payment for each piece of evidence they provide that directly implicates the business owner in tax fraud, with no prior verification of the evidence's authenticity. Option B. Share with the informant details of the business owner's financial records that the special agent has lawfully obtained through prior investigative steps, explaining that this will help the informant understand the context of their search. Option C. Subtly suggests to the informant that providing specific, incriminating details about the business owner's financial dealings, even if not directly asked for, could significantly enhance the informant's chances of receiving a substantial reward. Option D. Carefully document all interactions with the informant, clearly outlining the permissible scope of their assistance and any potential rewards, ensuring all information is gathered through lawful means, and respecting the subject's rights. The correct answer is D. Carefully document all interactions with the informant, clearly outlining the permissible scope of their assistance and any potential rewards, ensuring all information is gathered through lawful means, and respecting the subject's rights. Explanation. Scenario analysis. This scenario presents a professional challenge for an IRS special agent due to the inherent conflict between the need to gather intelligence on potential financial crimes and the strict ethical and legal boundaries governing investigative conduct. The agent must navigate the delicate balance of obtaining information without crossing the line into entrapment or violating the privacy rights of individuals who may not be directly involved in criminal activity. The pressure to develop leads and secure convictions can create a temptation to engage in ethically questionable tactics, making careful judgment and adherence to established protocols paramount. Correct approach analysis. The best professional practice involves meticulously documenting all interactions and ensuring that any information obtained is gathered through lawful means, respecting the subject's rights. This approach prioritizes integrity and due process. Specifically, the agent should rely on established investigative techniques such as surveillance, financial record analysis, and consensual interviews, all conducted within the bounds of the U.S. Constitution and IRS policy. The agent must avoid any suggestion of coercion or manipulation that could be construed as entrapment. This aligns with the IRS's mandate to uphold the law and maintain public trust, ensuring that investigations are fair, impartial, and legally sound. Incorrect approaches analysis. One incorrect approach involves subtly implying to the informant that providing specific, potentially incriminating information about a third party, even if not directly solicited, will lead to a favorable outcome for the informant. This tactic is ethically problematic as it could be interpreted as pressuring the informant to fabricate or exaggerate information, thereby compromising the integrity of the intelligence gathered. It also risks creating a situation where the informant feels compelled to provide information that is not entirely truthful, potentially leading the investigation down a false path and violating the informant's own ethical obligations. Another incorrect approach is to offer the informant a direct financial reward contingent upon the delivery of specific evidence that implicates a particular individual, without clear guidelines or oversight. This creates a strong incentive for the informant to manufacture or manipulate evidence to meet the stated condition, thereby undermining the reliability of the information and potentially leading to wrongful accusations. Such an arrangement blurs the lines of lawful evidence collection and could be seen as an attempt to buy testimony, which is a serious ethical and legal breach. A further incorrect approach involves the agent personally providing the informant with information about the target's financial activities that the agent has obtained through privileged or non-public means, under the guise of helping the informant understand the context. This action constitutes a severe breach of confidentiality and could be construed as obstruction of justice or misuse of official information. It compromises the integrity of the investigation by tainting the information flow and potentially tipping off the target or creating a defense for them. Professional reasoning. Professionals in this field should employ a decision-making framework that prioritizes adherence to legal statutes, IRS policies, and ethical principles. This involves a continuous assessment of the potential impact of investigative actions on the rights of individuals and the integrity of the investigation. When faced with situations involving informants, Agents should always operate with transparency, ensuring that informant agreements are clearly defined, lawful, and documented. Any information obtained should be corroborated through independent, lawful means. The agent's primary responsibility is to conduct thorough and ethical investigations that uphold the rule of law, rather than to secure convictions through questionable means. Question 9. Strategic planning requires an IRS criminal investigation, IRS special agent in California to consider potential ethical conflicts. While working on a sensitive tax fraud investigation involving a prominent local business owner, the agent learns that their spouse has been invited to a significant fundraising event hosted by a close associate of the target individual, and the spouse is considering accepting the invitation. The agent's spouse has no direct involvement in the investigation. What is the most appropriate course of action for the special agent? Option A. Continue the investigation as planned, confident that their professional ethics will prevent any actual bias, and that the spouse's attendance at the event is unrelated to their work. Option B. Discreetly inquire with their spouse about the nature of the fundraising event and the associate's relationship to the target, rationalizing it as a way to gather background information relevant to the investigation. Option C. Immediately report the situation to their supervisor and the IRS Ethics Council, seeking guidance on managing the potential conflict of interest and ensuring the investigation's integrity. Option D. Accept the gift without reporting it, believing their personal integrity will prevent any influence on their professional judgment regarding the investigation. The correct answer is C. Immediately report the situation to their supervisor and the IRS Ethics Council, seeking guidance on managing the potential conflict of interest and ensuring the investigation's integrity. Explanation. This scenario presents a professional challenge for an IRS criminal investigation, IRS special agent, due to the inherent conflict between the agent's duty to uphold the law and the potential for personal gain or influence from a source connected to an ongoing investigation. The agent must navigate this situation with absolute integrity, ensuring that no aspect of their professional conduct can be perceived as compromised, thereby undermining public trust and the integrity of the investigation. Careful judgment is required to maintain impartiality and avoid any appearance of impropriety. The best professional approach involves immediate and transparent disclosure of the potential conflict of interest to the agent's supervisor and the appropriate ethics counsel. This approach acknowledges the sensitive nature of the relationship and proactively seeks guidance on how to proceed in a manner that strictly adheres to IRS policies and federal ethics regulations. By reporting the situation, the agent demonstrates a commitment to ethical conduct and allows the agency to implement measures to ensure the investigation's integrity, such as reassigning the agent or establishing strict protocols to manage the situation. This aligns with the core principles of public service, which demand impartiality, accountability, and the avoidance of even the appearance of impropriety, as mandated by federal ethics laws and IRS internal guidelines. An approach that involves accepting the gift without reporting it is ethically and regulatorily unsound. This failure to disclose creates a direct conflict of interest and violates the principle of impartiality. It could be construed as accepting a bribe or gratuity, which is a serious ethical breach and potentially illegal. Furthermore, it undermines the integrity of the investigation by introducing a personal connection that could influence the agent's judgment or actions. Another unacceptable approach is to continue the investigation without disclosing the relationship, believing that personal integrity will prevent any influence. While the agent may genuinely believe they can remain impartial, the appearance of impropriety is sufficient to compromise the investigation's credibility. Federal ethics regulations and IRS policy emphasize not only actual conflicts of interest, but also the perception of such conflicts. This approach fails to address the potential for bias, however unintentional, and neglects the agency's responsibility to maintain public trust. Finally, an approach that involves subtly probing the individual about the investigation to gauge their knowledge or intentions, while rationalizing it as gathering intelligence, is also professionally unacceptable. This crosses the line from ethical conduct to potentially manipulative or coercive behavior. It risks compromising the investigation by revealing the agent's awareness of the relationship, or by creating an environment where the individual feels pressured, thereby jeopardizing the fairness and legality of the investigative process. Professionals in this situation should employ a decision-making framework that prioritizes transparency, adherence to established ethical guidelines, and seeking supervisory guidance. This involves recognizing potential conflicts early, understanding the relevant ethical regulations, such as those found in the Standards of Ethical Conduct for Employees of the Executive Branch and IRS internal policies, and acting proactively to mitigate any risks to the integrity of their work and the agency. Question 10. Strategic planning requires an IRS special agent in Chicago, Illinois, to assess a complex financial transaction involving a shell corporation and offshore accounts. The agent identifies a pattern of significant cash deposits into a business account that are disproportionately low compared to reported revenue. Further investigation reveals that the business's reported expenses are inflated by approximately 30% through fabricated invoices from a foreign supplier. The agent estimates that the undeclared income, based on the discrepancy between actual cash flow and reported revenue, and adjusted for the inflated expenses, amounts to $750,000 for the tax year. If the average federal tax rate for this individual is 25%, and the estimated penalty for underpayment is 20% of the underpaid tax, what is the total estimated tax liability and penalty? Option A. The total estimated tax liability and penalty is $375,000. Option B. The total estimated tax liability and penalty is $281,250. Option C. The total estimated tax liability and penalty is $337,500. Option D. The total estimated tax liability and penalty is $225,000. The correct answer is C. The total estimated tax liability and penalty is $337,500. Explanation. Strategic planning requires a thorough understanding of financial irregularities and the ethical obligations of an IRS criminal investigation, IRS special agent. This scenario presents a professional challenge due to the potential for a significant financial misstatement to go undetected, impacting tax revenue and potentially defrauding the government. The agent must balance the need for thorough investigation with the imperative to act ethically and within legal boundaries. The core of the challenge lies in discerning legitimate business practices from deliberate concealment of income, requiring a deep dive into financial records and an understanding of accounting principles. The correct approach involves a meticulous, evidence-based investigation that adheres strictly to IRS procedures and legal statutes. This means identifying discrepancies, gathering supporting documentation, and consulting with forensic accountants or other specialists as needed. The agent must maintain objectivity, avoid premature conclusions, and ensure all investigative steps are legally sound and ethically defensible. Specifically, the agent should focus on tracing the flow of funds, identifying undeclared assets, and quantifying the extent of the underreported income. This systematic approach ensures that any subsequent actions, such as search warrants or arrests, are based on probable cause and are legally justifiable under Title 26 of the United States Code. The agent's duty is to uncover the truth, regardless of the potential consequences for the individuals involved, while upholding the integrity of the tax system. An incorrect approach would be to rely solely on the initial suspicious transaction without further corroboration. This could lead to an unfounded accusation and a violation of due process. Another incorrect approach would be to ignore the discrepancies due to the complexity of the financial instruments or the perceived low likelihood of criminal intent. This would be a dereliction of duty and a failure to uphold the agent's responsibility to investigate potential tax fraud. Furthermore, making assumptions about the taxpayer's intent without concrete evidence is ethically unsound and legally problematic. The agent must follow the evidence, not conjecture. Finally, attempting to coerce a confession or plea without sufficient evidence is a serious ethical and legal breach, undermining the fairness of the investigation. The professional decision-making process in such a situation should involve a systematic evaluation of the available information. This includes 1. Identifying the initial red flags and the specific nature of the suspicious activity. 2. Developing a hypothesis about potential criminal activity. 3. Formulating an investigative plan to gather evidence that either supports or refutes the hypothesis, ensuring all actions are legally authorized and ethically conducted. 4. analyzing the gathered evidence objectively, quantifying any financial irregularities, and consulting with subject matter experts when necessary. 5. Documenting all findings meticulously and preparing a comprehensive report for prosecutorial review if probable cause is established. This structured approach ensures that investigations are thorough, fair, and compliant with all legal and ethical standards. Question 11. The control framework reveals that an IRS criminal investigation, IRSI special agent in California, has learned that a close personal friend, with whom they have a long-standing financial entanglement, is potentially involved in a complex tax fraud scheme currently under investigation by the agent's unit. The agent has not yet directly encountered evidence linking the friend to the scheme in their assigned investigative tasks, but the agent's personal knowledge creates a significant ethical quandary. What is the most appropriate course of action for the special agent to take in this situation, adhering to United States federal ethics regulations and IRSCI protocols? Option A. Subtly alter the investigative focus to steer away from any lines of inquiry that could directly expose the friend's potential involvement, believing this will protect both the investigation and their personal relationship. Option B. Resign from the specific investigation without formally disclosing the reason for the withdrawal, hoping to avoid any perception of impropriety by removing themselves from the situation entirely. Option C. Continue with the investigation as assigned, exercising personal discretion to avoid any actions that might inadvertently implicate the friend, while maintaining the personal relationship in secret. Option D. Immediately report the potential conflict of interest to their direct supervisor and the IRSCI's designated ethics counsel, requesting guidance on recusal or other appropriate measures to ensure the integrity of the investigation. The correct answer is D. Immediately report the potential conflict of interest to their direct supervisor and the IRSCI's designated ethics counsel, requesting guidance on recusal or other appropriate measures to ensure the integrity of the investigation. Explanation. The control framework reveals a situation where an IRS criminal investigation, IRSI, special agent is presented with information that could potentially compromise an ongoing investigation. This scenario is professionally challenging because it pits the agent's duty to uphold the integrity of the investigation against a personal relationship and the potential for personal gain or avoidance of personal detriment. The agent must navigate this conflict with absolute adherence to the IRSCI's ethical standards and the governing regulations of the United States. Careful judgment is required to ensure that no action taken or not taken prejudices the investigation or violates the agent's oath and responsibilities. The best professional approach involves immediately and fully disclosing the conflict of interest to the agent's supervisor and the appropriate ethics counsel. This approach is correct because it adheres strictly to the principles of transparency, accountability, and the avoidance of even the appearance of impropriety, which are foundational to maintaining public trust in law enforcement. Specifically, the Internal Revenue Manual (IRM) and the Standards of Ethical Conduct for Employees of the Executive Branch, 5 CFR Part 2635, mandate that employees report any situation that could present a conflict of interest. By reporting, the agent allows for an objective assessment and management of the conflict, ensuring that the investigation's integrity is paramount and that the agent's personal interests do not influence investigative decisions. This proactive disclosure is the most robust method for preventing ethical breaches and maintaining the credibility of the IRSCI. An incorrect approach would be to proceed with the investigation while attempting to manage the personal relationship independently, believing that personal discretion can prevent any compromise. This fails to acknowledge the inherent risk of unconscious bias and the appearance of impropriety. It violates the ethical obligation to report potential conflicts and undermines the control framework's purpose of ensuring objective oversight. Another incorrect approach would be to subtly steer the investigation away from areas that might directly implicate the individual without formal disclosure. This constitutes a direct compromise of investigative integrity and a severe ethical violation, as it involves actively manipulating the investigative process for personal reasons. It is a breach of the agent's duty to pursue all leads impartially and objectively. Finally, an incorrect approach would be to resign from the case or the agency without proper disclosure and handover. While this might seem like an avoidance of the conflict, It is unprofessional if not handled through the proper channels. It fails to address the ethical obligation to report the conflict and could leave the investigation vulnerable during a transition period. The professional reasoning process for similar situations should involve a clear step-by-step approach. 1. Recognize the potential conflict of interest. 2. Immediately cease any actions that could be perceived as influenced by the conflict. 3. Consult relevant ethical guidelines and regulations e.g. 5 CFR Part 2635. 4. Promptly and fully disclose the situation to the designated supervisor and ethics officials. 5. Follow the guidance provided by supervisors and ethics officials regarding recusal or other conflict management strategies. 6. Document all disclosures and actions taken. Question 12. Stakeholder feedback indicates a need to assess the ethical judgment of IRS special agents in California when faced with personal entanglements. Imagine you are an IRS special agent in California investigating potential tax fraud. You discover that a key individual in the investigation is a very close personal friend with whom you have a long-standing relationship. You have no prior knowledge of this individual's potential involvement before commencing this specific investigation. How should you proceed? Option A. Immediately report the personal relationship and potential conflict of interest to your special agent in charge, SAC, or designated supervisor. Option B. Discuss the situation with your friend to gauge their involvement and seek their assurances before reporting to your supervisor. Option C. Continue the investigation, confident in your ability to remain objective and impartial despite the personal relationship. Option D. Delay reporting the conflict until the investigation reaches a more advanced stage to avoid disrupting the ongoing work. The correct answer is A. Immediately report the personal relationship and potential conflict of interest to your special agent in charge, SAC, or designated supervisor. Explanation. Scenario analysis. This scenario presents a professional challenge for an IRS special agent in California due to the inherent conflict between a personal relationship and the duty to conduct an impartial investigation. The agent's knowledge of potential financial improprieties involving a close friend creates a significant ethical dilemma. Maintaining public trust in the IRS and upholding the integrity of criminal investigations requires agents to avoid even the appearance of impropriety. The agent must navigate this situation with utmost discretion and adherence to strict ethical guidelines and IRS policy to prevent any compromise of the investigation or their professional standing. Correct approach analysis. The best professional practice is to immediately and fully disclose the personal relationship and the potential conflict of interest to the special agent in charge, SAC, or designated supervisor. This approach is correct because it prioritizes transparency and allows for an objective assessment of the situation by superiors. IRS policy and federal ethics regulations mandate reporting such conflicts to ensure impartiality and prevent any perception of bias or favoritism. By disclosing, the agent upholds their duty of loyalty to the IRS and the public trust, enabling the agency to take appropriate steps, such as reassigning the investigation, to maintain its integrity. This proactive disclosure is the cornerstone of ethical conduct in law enforcement and government service. Incorrect approaches analysis. One incorrect approach is to proceed with the investigation while attempting to remain objective, believing personal feelings will not influence the outcome. This is professionally unacceptable because it ignores the appearance of impropriety, which can be as damaging as actual bias. Even if the agent believes they can remain impartial, their continued involvement could be perceived by the subject, other colleagues, or the public as compromised, undermining the investigation's legitimacy and the IRS's credibility. Another incorrect approach is to delay reporting the conflict until the investigation is significantly advanced or completed. This is ethically and regulatorily flawed because it constitutes a failure to disclose a known conflict in a timely manner. Such a delay can be interpreted as an attempt to conceal the relationship or its potential influence, leading to severe disciplinary action, including potential invalidation of investigative findings and damage to the agent's career. It violates the principle of immediate reporting of conflicts of interest. A third incorrect approach is to confide in the friend about the investigation and seek their perspective or assurances of innocence before reporting to superiors. This is a grave ethical and regulatory breach. It involves discussing an ongoing investigation with an unauthorized party, potentially compromising sensitive information, and creating an even greater conflict of interest. It also demonstrates a severe lapse in judgment and a failure to understand the agent's duty to the government and the investigative process. Professional reasoning. Professionals in IRSCI must employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This framework involves 1. Recognizing potential conflicts of interest, including personal relationships that could influence professional duties. 2. Understanding the relevant IRS policies, federal ethics regulations, and the U.S. Code of Federal Regulations concerning conflicts of interest. 3. Prioritizing transparency and immediate disclosure of any identified conflict to the appropriate supervisory authority. 4. Cooperating fully with supervisors to implement measures that mitigate or eliminate the conflict, such as reassignment. 5. Maintaining strict confidentiality regarding investigative matters and avoiding any discussion of ongoing investigations with unauthorized individuals. This systematic approach ensures that investigations remain impartial, credible, and free from any taint of impropriety. Question 13. System analysis indicates that an IRS criminal investigation, IRS-SI, special agent in Chicago, Illinois, is assigned to investigate a complex financial fraud scheme. During the course of the investigation, the agent discovers that a key witness providing crucial information is a close personal friend from college. The agent has not previously disclosed this acquaintance. What is the most ethically sound and professionally responsible course of action for the special agent to take in this situation? Option A. Immediately report the acquaintance to their supervisor and request to be recused from any aspect of the investigation involving the witness. Option B. Inform the witness of the investigation's progress and offer advice on how to best navigate the questioning process to protect their interests. Option C. Proceed with the investigation without informing their supervisor, believing their personal relationship will not influence their professional judgment. Option D. Continue the investigation as planned, but discreetly attempt to steer the questioning of the witness in a way that minimizes any potential negative impact on their personal relationship. The correct answer is A. Immediately report the acquaintance to their supervisor and request to be recused from any aspect of the investigation involving the witness. Explanation. Scenario analysis. This scenario presents a professional challenge because it involves a potential conflict between a personal relationship and the duty to conduct an impartial investigation. The special agent must navigate the delicate balance of maintaining professional integrity while acknowledging a personal connection that could be perceived as influencing their judgment. Failure to properly manage this conflict could lead to accusations of bias, compromise the investigation's credibility, and violate IRSCI's ethical standards and the U.S. Department of Justice's principles of federal prosecution. Correct approach analysis. The best professional practice is to immediately disclose the relationship to the special agent's supervisor and recuse oneself from any aspect of the investigation involving the acquaintance. This approach upholds the principle of impartiality, which is fundamental to law enforcement investigations. By disclosing the relationship, the agent demonstrates transparency and a commitment to avoiding even the appearance of impropriety. Recusal ensures that the investigation proceeds without any potential for personal bias to influence evidence gathering, witness interviews, or prosecutorial recommendations. This aligns with IRSCI's internal policies on conflicts of interest and the broader ethical obligations of federal agents to maintain public trust and ensure justice is served fairly. Incorrect approaches analysis. Disclosing the relationship but continuing to participate in the investigation, even in a limited capacity, is professionally unacceptable. While disclosure is a positive step, continued involvement, even with the intention of remaining objective, creates an unacceptable risk of perceived or actual bias. The mere presence of the acquaintance in the investigative process could cast doubt on the integrity of the findings, regardless of the agent's actual intentions. This approach fails to fully address the appearance of impropriety and could lead to challenges regarding the investigation's validity. Proceeding with the investigation without disclosing the relationship is a severe ethical and regulatory failure. This constitutes a direct violation of IRSCI's conflict of interest policies and the foundational ethical principles of federal law enforcement. Such an omission undermines the agent's integrity, compromises the investigation, and erodes public trust in the IRS. It can lead to disciplinary action, including termination, and potentially jeopardize any subsequent prosecution. Attempting to subtly influence the investigation to benefit the acquaintance, even if not explicitly stated, is a grave ethical breach and a criminal act. This represents an abuse of power and a betrayal of the agent's oath to uphold the law. It directly violates the principles of justice and fairness, and would result in severe legal and professional consequences. Professional reasoning. Professionals facing such dilemmas should employ a structured decision-making process. First, identify the potential conflict of interest. Second, consult relevant ethical guidelines and agency policies, e.g., IRSCI's conflict of interest policies, DOJ guidelines. Third, prioritize transparency and impartiality. Fourth, seek guidance from a supervisor or ethics officer. Fifth, take decisive action to mitigate the conflict, which often involves recusal. The overarching principle is to protect the integrity of the investigation and maintain public trust, even if it requires personal sacrifice or inconvenience. Question 14. Strategic planning requires IRS criminal investigation, IRSI, Special Agent, Agent Miller, to consider potential ethical dilemmas. Agent Miller discovers that a key witness in an ongoing tax fraud investigation is a close personal friend from childhood. The investigation is in its early stages, and the witness's testimony is crucial for establishing a pattern of illicit financial activity. Agent Miller has not yet interacted with this witness in an official capacity regarding this case. What is the most ethically sound and professionally responsible course of action for Agent Miller to take in this situation, adhering to IRSCI's ethical standards and the principles of federal law enforcement in the United States? Option A. Inform the friend of their involvement in the investigation and advise them on how to best cooperate with the IRS to minimize potential legal repercussions. Option B. Immediately report the personal relationship to their direct supervisor and request to be recused from any aspect of the investigation involving the witness. Option C. Subtly alter the investigative plan to avoid direct questioning of the witness on sensitive financial details that might implicate their friend. Option D. Proceed with the investigation as planned, relying on their professional integrity to remain objective and unbiased in their interactions with the witness. The correct answer is B. Immediately report the personal relationship to their direct supervisor and request to be recused from any aspect of the investigation involving the witness. Explanation. This scenario presents a professional challenge for an IRS criminal investigation, IRSI, special agent due to the inherent conflict between the agent's duty to uphold the law and the potential for personal gain or influence. The agent must navigate a situation where a close personal relationship could compromise the integrity of an ongoing investigation, potentially leading to obstruction of justice or a violation of departmental ethics. Careful judgment is required to ensure that all investigative actions are based solely on evidence and legal mandates, free from personal bias or external pressure. The best professional approach involves immediately and transparently disclosing the personal relationship to the supervising agent and relevant authorities. This action upholds the principle of impartiality and demonstrates a commitment to ethical conduct and the integrity of the investigation. By recusing oneself from any aspect of the investigation that could be influenced by the relationship, the agent ensures that the investigation proceeds without the appearance or reality of impropriety. This aligns with IRSCI's strict ethical guidelines and the broader principles of law enforcement integrity, which demand that agents avoid conflicts of interest and maintain public trust. An incorrect approach would be to proceed with the investigation without disclosing the relationship, hoping to maintain objectivity. This fails to acknowledge the inherent risk of unconscious bias and creates a situation where the investigation's legitimacy could be questioned, even if no actual impropriety occurred. It violates the ethical obligation to avoid even the appearance of impropriety, and could lead to accusations of favoritism or obstruction. Another incorrect approach is to subtly steer the investigation away from areas that might directly implicate the friend, while still appearing to conduct a thorough inquiry. This constitutes a deliberate attempt to manipulate the investigative process for personal reasons, which is a severe ethical breach and potentially a criminal offense. It undermines the agent's oath and the fundamental purpose of IRSCI's mission. Finally, attempting to use the investigative knowledge gained to warn the friend about potential lines of inquiry, even with the intention of encouraging compliance, is also professionally unacceptable. This constitutes unauthorized disclosure of sensitive investigative information and can be construed as aiding and abetting potential criminal activity by allowing the subject to prepare or conceal evidence. The professional decision-making process in such situations should involve a clear understanding of the agency's code of conduct and ethics policies. Agents should prioritize transparency, impartiality, and the integrity of the investigation above all else. When a potential conflict of interest arises, the immediate step should be to report it to a supervisor and seek guidance, ensuring that appropriate measures are taken to maintain the fairness and credibility of the investigative process. Question 15. The efficiency study reveals that a special agent in IRS criminal investigation, based in Chicago, Illinois, has discovered that a close personal friend, whom they have known for over a decade and with whom they maintain frequent social contact, is the sole proprietor of a small business currently under preliminary review for potential tax evasion. The agent has not yet been formally assigned to this specific case, but is aware of its existence within their operational area. What is the most ethically sound and professionally responsible course of action for the special agent? Option A. Discreetly attempt to steer any potential investigative efforts away from the friend's business without formally disclosing the relationship to avoid unnecessary complications. Option B. Continue with their duties, believing their personal integrity is sufficient to prevent any bias and that no formal action is necessary unless the case is formally assigned to them. Option C. Immediately report the personal relationship to their direct supervisor and the IRS Ethics Office, requesting guidance on recusal or reassignment of duties related to any potential investigation involving the friend's business. Option D. Downplay the significance of the friendship to themselves and colleagues, rationalizing that the relationship is not close enough to constitute a genuine conflict of interest. The correct answer is C. Immediately report the personal relationship to their direct supervisor and the IRS Ethics Office, requesting guidance on recusal or reassignment of duties related to any potential investigation involving the friend's business. Explanation. The efficiency study reveals a potential conflict of interest that requires careful navigation by an IRS special agent. The challenge lies in balancing the agent's duty to uphold the law and investigate financial crimes with the personal relationships that could be perceived as compromising impartiality. The agent must act with integrity and avoid any appearance of impropriety, as mandated by IRS ethical guidelines and federal regulations concerning conflicts of interest for government employees. The best approach involves immediate and transparent disclosure of the relationship to the supervising agent and the appropriate IRS office. This allows for an objective assessment of the situation and the implementation of necessary safeguards, such as recusal from the investigation or reassignment of duties. This proactive disclosure upholds the principle of maintaining public trust and ensures that the investigation proceeds without any suggestion of bias or undue influence. It aligns with the core ethical tenet of avoiding even the appearance of impropriety, which is paramount for law enforcement agencies. An approach that involves continuing the investigation without disclosure, while believing personal integrity will prevent any influence, is ethically flawed. It violates the duty to report potential conflicts and creates a significant risk of perceived or actual bias, undermining the integrity of the investigation and the agency. This failure to disclose is a direct contravention of conflict of interest regulations. Another unacceptable approach would be to subtly steer the investigation away from the friend's business without any formal disclosure or recusal. This constitutes an indirect conflict of interest and an abuse of official position. It suggests an attempt to manage the conflict unilaterally, which is not permitted and can lead to accusations of favoritism or obstruction. Finally, attempting to downplay the significance of the relationship or rationalize its existence without proper reporting is also professionally unsound. This demonstrates a lack of understanding of the stringent ethical standards required of federal agents and the importance of maintaining an unimpeachable reputation for impartiality. Professionals in this situation should employ a decision-making process that prioritizes transparency, adherence to established conflict of interest policies, and consultation with supervisors. The default action should always be to err on the side of caution and disclose any situation that could reasonably be perceived as a conflict, allowing the agency to manage the risk appropriately. Question 16. Strategic planning requires IRS criminal investigation, IRS special agents to anticipate and manage potential ethical challenges. Imagine you are an IRS special agent in California, and you discover that a subject of an active financial fraud investigation is your former college roommate, with whom you maintain a friendly, albeit infrequent, personal relationship. You have not spoken to them in over a year, but you know they are the subject of this investigation. What is the most ethically sound and professionally responsible course of action? Option A. Continue with the investigation as planned, confident that your professional judgment will not be compromised by the past personal acquaintance. Option B. Discreetly attempt to gather information from other sources to corroborate or refute any findings related to your former roommate, without directly interacting with them on the case. Option C. Immediately report the personal relationship and potential conflict of interest to your direct supervisor, and await further instructions regarding your involvement in the investigation. Option D. Inform your former roommate about the investigation and advise them on how to best cooperate with IRSCI to potentially mitigate their situation. The correct answer is C. Immediately report the personal relationship and potential conflict of interest to your direct supervisor and await further instructions regarding your involvement in the investigation. Explanation: this scenario presents a professional challenge due to the inherent conflict between the agent's duty to uphold the law and the potential for personal gain or influence. The agent must navigate a situation where a close personal relationship could compromise their objectivity and the integrity of an ongoing investigation. The need for careful judgment is paramount to avoid even the appearance of impropriety, which can erode public trust and undermine the effectiveness of IRS criminal investigation. IRS. The best professional approach involves immediate and transparent disclosure of the conflict of interest to the appropriate supervisory authority. This approach is correct because it adheres strictly to the ethical guidelines and regulations governing federal law enforcement agents, including those within the IRS. Specifically, the IRSCI Manual and federal ethics regulations mandate reporting any potential or actual conflicts of interest to supervisors. This allows for proper management of the situation, such as recusal from the investigation or reassignment of duties, thereby preserving the integrity of the investigation and demonstrating unwavering commitment to impartiality. An incorrect approach would be to proceed with the investigation without disclosing the relationship, rationalizing that personal feelings will not influence professional judgment. This fails to acknowledge the appearance of impropriety and violates the core ethical principle of avoiding conflicts of interest. Such a failure can lead to accusations of bias, compromised evidence, and potential dismissal of charges, severely damaging the investigation and the agent's career. Another incorrect approach is to subtly steer the investigation away from the individual without explicit disclosure. While seemingly an attempt to mitigate the conflict, this action still operates within the shadow of a concealed conflict. It lacks transparency and can be perceived as an attempt to manipulate the investigation, even if the intent is benign. This undermines the principle of open and accountable law enforcement. Finally, accepting a gift or favor from the individual under investigation, even if seemingly unrelated to the case, constitutes a severe ethical breach. This creates a direct quid pro quo or the appearance thereof, compromising the agent's independence and potentially leading to bribery or extortion charges. It is a blatant violation of federal ethics regulations and IRSCI policy. Professionals should employ a decision-making framework that prioritizes transparency, adherence to policy, and the preservation of investigative integrity. This involves proactively identifying potential conflicts, immediately reporting them to supervisors, and strictly adhering to any directives issued regarding recusal or reassignment. The guiding principle should always be to act in a manner that upholds the public trust and the mission of IRSCI. Question 17. The assessment process reveals that an IRSCI special agent in California receives an anonymous tip alleging significant tax fraud by a local business owner. The tip includes specific financial details, but is accompanied by a note from the sender expressing a strong personal dislike for the business owner, hinting at a past dispute. The agent must decide how to proceed with this information. Option A. Immediately initiate a full-scale audit and investigation of the business owner based on the tip, assuming the allegations are true due to the specificity of the financial details. Option B. Independently verify the financial details provided in the tip by cross-referencing them with publicly available records, tax filings, and other objective data sources before taking any further investigative action. Option C. Disregard the tip entirely, concluding that the sender's personal animosity makes the information unreliable and not worth pursuing. Option D. Contact the business owner directly to inquire about the allegations, informing them that an anonymous tip has been received. The correct answer is B. Independently verify the financial details provided in the tip by cross-referencing them with publicly available records, tax filings, and other objective data sources before taking any further investigative action. Explanation. The assessment process reveals a scenario that is professionally challenging due to the inherent conflict between the duty to investigate potential financial crimes and the obligation to maintain professional skepticism and avoid prejudgment. The agent must navigate a situation where a source provides information that, if true, could indicate serious wrongdoing, but the information is also presented in a way that suggests a personal vendetta. Careful judgment is required to ensure the investigation remains objective, evidence-based, and compliant with IRS policies and ethical standards. The best professional approach involves meticulously verifying the information provided by the source through independent, objective means. This means cross-referencing the allegations with financial records, public databases, and other verifiable data sources. The agent must treat the information as a lead, not as established fact, and conduct a thorough, unbiased investigation to determine its veracity. This aligns with the IRS's mandate to pursue all credible leads while upholding due process and the presumption of innocence until proven guilty. Ethical standards demand impartiality and a commitment to uncovering the truth, regardless of the source's motivations. An approach that immediately escalates the investigation based solely on the source's uncorroborated claims, without independent verification, is professionally unacceptable. This bypasses critical investigative steps, risks wasting valuable resources on unsubstantiated allegations, and could lead to an unfounded investigation that unfairly targets an individual or entity, fails to adhere to the principle of building a case on solid evidence. Another professionally unacceptable approach is to dismiss the information outright due to the perceived personal animosity of the source. While the source's motivations are a factor to consider in assessing credibility, they do not automatically invalidate potentially valid information. A responsible investigator must still explore the substance of the allegations, even if the source is biased, to ensure no criminal activity is overlooked. This approach risks ignoring genuine evidence of wrongdoing. Finally, an approach that involves confronting the subject of the allegations prematurely, based on the unverified claims of the source, is also professionally unsound. This can compromise the investigation, alert the subject to the inquiry, and potentially allow them to destroy evidence or evade detection. It violates standard investigative protocols that emphasize discretion and the collection of sufficient evidence before any direct engagement with the subject. The professional reasoning framework for such situations involves a systematic process. 1. Acknowledge and document the information received. 2. Assess the credibility of the source, considering potential biases and motivations. 3. Prioritize independent verification of all allegations. 4. Develop an investigative plan focused on gathering objective evidence. 5. Maintain professional skepticism throughout the investigation. 6. Adhere strictly to legal and ethical guidelines governing investigations. 7. Ensure all actions are based on evidence, not speculation or personal opinions. Question 18. Analysis of a situation in the United States where an IRS criminal investigation, IRS special agent is approached by a personal acquaintance who offers information about potential tax fraud, claiming the information is first-hand knowledge. The acquaintance hints at a desire for leniency in unrelated personal matters. What is the most ethically sound and legally compliant course of action for the special agent? Option A. Meticulously document the conversation. Clearly advise the acquaintance that any cooperation must be voluntary and subject to official IRS procedures, and commit to independently verifying any information provided before taking further action, while also reporting the potential informant relationship to superiors. Option B. Inform the acquaintance that the agent cannot accept information from personal contacts due to potential conflicts of interest, and advise them to report their information through official channels. Option C. Advise the acquaintance that, while the information is noted, the agent cannot discuss personal matters or offer any guarantees regarding leniency due to strict IRS regulations. Option D. Immediately initiate an investigation based solely on the acquaintance's information, promising the acquaintance that their cooperation will be noted and potentially lead to leniency in their personal matters. The correct answer is A. Meticulously document the conversation. Clearly advise the acquaintance that any cooperation must be voluntary and subject to official IRS procedures, and commit to independently verifying any information provided before taking further action, while also reporting the potential informant relationship to superiors. Explanation. This scenario presents a professional challenge for an IRS criminal investigation, IRS special agent, due to the inherent conflict between the agent's duty to uphold the law and the personal relationship with a potential informant. The agent must navigate the ethical tightrope of utilizing information for an investigation, while ensuring that no laws or departmental policies are violated, and that the integrity of the investigation is maintained. The pressure to secure a conviction or gather crucial evidence can tempt an agent to overlook procedural safeguards or engage in questionable practices, making careful judgment paramount. The best professional approach involves meticulously documenting all interactions with the individual, clearly outlining the terms of any potential cooperation, and ensuring that any information provided is corroborated through independent means before acting upon it. This approach aligns with the IRS's commitment to ethical conduct and adherence to the U.S. legal framework, particularly the U.S. Department of Justice's Guidelines on Informant Management and the principles of due process. By maintaining strict documentation and seeking independent verification, the agent upholds the integrity of the investigation and avoids any appearance of impropriety or reliance on potentially biased or fabricated information. This also ensures compliance with internal IRS policies regarding the use of confidential sources. An incorrect approach would be to immediately act on the information provided by the acquaintance without any independent verification, especially if the acquaintance has a personal motive that could compromise the information's reliability. This bypasses crucial investigative steps and could lead to a flawed investigation, potentially jeopardizing any subsequent legal proceedings. It also risks violating IRS policies that mandate corroboration of informant testimony. Another incorrect approach would be to offer leniency or preferential treatment to the acquaintance in exchange for information, as this could be construed as bribery or obstruction of justice, violating federal statutes and IRS ethical standards. Furthermore, failing to disclose the personal relationship with the acquaintance to superiors could be seen as a breach of trust and a violation of departmental reporting requirements. Professionals in this situation should employ a decision-making framework that prioritizes adherence to legal and ethical standards above all else. This involves a clear understanding of the relevant U.S. laws and IRS policies, a commitment to transparency and documentation, and a willingness to consult with supervisors and legal counsel when faced with complex ethical dilemmas. The agent should always ask, is this action consistent with the law, departmental policy, and the principles of justice? If there is any doubt, the agent should err on the side of caution and seek guidance. Question 19. The review process indicates that an IRS special agent stationed in California has received credible information suggesting potential tax fraud by a business owner with whom the agent has a close personal friendship, including regular social interactions. The agent believes they can conduct the investigation impartially, despite the personal connection. What is the most ethically sound and professionally appropriate course of action for the agent? Option A. Discreetly inform the acquaintance about the potential investigation, offering advice on how to prepare or mitigate any findings. Option B. Immediately disclose the personal relationship to their supervising agent and relevant authorities, and request guidance on recusal or reassignment to ensure the investigation's impartiality. Option C. Attempt to subtly influence the direction of the investigation to avoid uncovering significant evidence against the acquaintance, without formally disclosing the relationship. Option D. Proceed with the investigation, confident in their ability to remain objective and unbiased due to their professional training and personal integrity. The correct answer is B. Immediately disclose the personal relationship to their supervising agent and relevant authorities, and request guidance on recusal or reassignment to ensure the investigation's impartiality. Explanation. The review process indicates a scenario where an IRS special agent in California is presented with information that could potentially lead to a significant criminal investigation. The challenge lies in balancing the agent's duty to investigate potential financial crimes with the ethical imperative to avoid conflicts of interest and maintain impartiality. The agent's personal relationship with the subject of the potential investigation creates a significant ethical hurdle that could compromise the integrity of the investigation and public trust in law enforcement. Careful judgment is required to ensure that any actions taken are based solely on investigative merit and not influenced by personal connections. The best professional approach involves immediately disclosing the personal relationship to the supervising agent and relevant authorities. This proactive disclosure allows for an objective assessment of the situation and the implementation of appropriate safeguards. These safeguards could include recusal from the investigation, reassignment of the case, or the establishment of strict protocols to ensure impartiality. This approach is correct because it upholds the core ethical principles of transparency, integrity, and impartiality, which are paramount for IRS special agents. Adherence to these principles is mandated by IRS policy and federal law enforcement ethics guidelines, which emphasize avoiding even the appearance of impropriety to maintain public confidence. An approach where the agent proceeds with the investigation without disclosing the relationship, believing they can remain objective, is professionally unacceptable. This failure to disclose creates a direct conflict of interest and violates ethical standards that require agents to report any personal connections that could influence their judgment or create an appearance of bias. Such a failure could lead to the compromise of evidence, the undermining of the investigation's credibility, and potential legal challenges to any findings. Another professionally unacceptable approach is to share the information with the acquaintance, framing it as a warning or advice. This action constitutes a severe breach of confidentiality and professional conduct. IRS special agents are bound by strict rules regarding the dissemination of non-public investigative information. Sharing such information, even with the subject of a potential investigation, can obstruct justice, compromise ongoing investigations, and lead to severe disciplinary action, including criminal charges. Finally, an approach where the agent attempts to subtly steer the investigation away from the acquaintance without formal disclosure or recusal is also professionally unacceptable. This constitutes an indirect conflict of interest and an attempt to manipulate the investigative process for personal reasons. It undermines the principle of equal application of the law and erodes the agent's integrity and the agency's reputation. The professional reasoning framework for such situations involves a multi-step process. 1. Recognize the potential conflict of interest arising from personal relationships. 2. Immediately consult relevant agency policies and ethical guidelines. 3. Disclose the conflict to the appropriate supervisor and relevant authorities. 4. Cooperate fully in establishing measures to ensure the integrity of the investigation, which may include recusal or reassignment. 5. Prioritize the agency's mission and public trust above personal relationships. Question 20. Performance analysis shows an IRS special agent in California is investigating a complex tax fraud scheme. The primary informant providing crucial leads has expressed financial hardship and mentioned a personal, minor tax discrepancy from several years ago that they are worried about. The informant implies that their continued cooperation is contingent on the agent ensuring this personal issue is taken care of without further scrutiny. The agent has the discretion to authorize small, documented informant payments for expenses and information, but this situation goes beyond typical reimbursement. The agent needs to assess the most appropriate and legally compliant course of action. Option A. Agree to look the other way regarding the informant's past tax discrepancy, effectively using this as leverage to secure their cooperation and information. Option B. Negotiate a direct percentage of any potential asset forfeiture or tax recovery with the informant as compensation for their information, bypassing standard informant award procedures. Option C. Offer the informant a personal loan from the agent's own funds, to be repaid later, to alleviate their immediate financial stress and ensure continued cooperation. Option D. Authorize a documented informant payment for expenses and information, ensuring it is within established guidelines and clearly tied to the investigative value of the information provided, while advising the informant that personal tax matters must be handled through official IRS channels. The correct answer is D. Authorize a documented informant payment for expenses and information, ensuring it is within established guidelines and clearly tied to the investigative value of the information provided, while advising the informant that personal tax matters must be handled through official IRS channels. Explanation. Scenario analysis. This scenario presents a professional challenge for an IRS special agent due to the inherent conflict between the need to gather evidence for a criminal investigation and the ethical obligation to maintain the integrity of that evidence and the investigative process. The agent must navigate the potential for personal gain or perceived benefit to influence their actions, which could compromise the investigation and lead to legal challenges or the exclusion of crucial evidence. The agent's judgment is critical in ensuring that all investigative actions are conducted within legal and ethical boundaries, particularly when dealing with financial data and potential informants. Correct approach analysis. The best professional practice involves meticulously documenting all interactions and transactions, ensuring that any financial benefit provided to an informant is fully authorized, properly accounted for, and directly related to the investigative objective. This approach aligns with IRS policies and federal regulations governing informant compensation and evidence handling. Specifically, 26 U.S. Code Section 7623 outlines the procedures for informant awards, requiring proper authorization and documentation. Ethically, this approach upholds transparency, accountability, and the integrity of the investigation by preventing any appearance of impropriety or undue influence on the informant's testimony or the evidence provided. The agent must ensure that the informant's compensation is a direct and justifiable expense of the investigation, not a personal gratuity. Incorrect approaches analysis. Providing the informant with a personal loan without proper authorization or documentation is ethically unsound and violates IRS policy. This action creates a personal debt, blurring the lines between official investigative expenses and personal financial assistance, which could be construed as bribery or coercion, compromising the informant's credibility and the admissibility of any evidence obtained. It bypasses established financial controls and reporting requirements, offering to forget a minor personal tax infraction of the informant in exchange for information is a clear violation of the agent's duty to uphold tax laws impartially. This constitutes an abuse of power and creates an unethical quid pro quo, undermining the integrity of the IRS and the legal process. It also introduces a significant conflict of interest, as the agent is leveraging their official position for personal gain or perceived gain for the informant. Accepting the informant's offer to provide information in exchange for a direct percentage of any recovered funds, without prior approval and adherence to established informant award procedures, is a serious ethical and regulatory breach. This arrangement bypasses the formal, authorized channels for informant compensation, potentially leading to disputes over payment and raising concerns about the informant's motivation being solely financial gain rather than a genuine desire to assist law enforcement. It also circumvents the established process for determining appropriate awards based on the value and utility of the information provided. Professional reasoning. Professionals in IRS must adhere to a strict ethical code and regulatory framework. When faced with situations involving informants and financial considerations, the decision-making process should involve 1. Consulting relevant IRS policies and federal statutes, e.g., 26 U.S. Code Section 7623, regarding informant compensation and evidence handling. 2. Prioritizing transparency and meticulous documentation of all interactions and financial transactions. 3. Seeking supervisory approval for any proposed informant compensation or investigative expenses. 4. Avoiding any personal involvement or appearance of impropriety that could compromise the investigation or the agent's integrity. 5. Ensuring that all actions are solely for the purpose of advancing the official investigation and are conducted within legal and ethical boundaries.